out of me, faux show. Hey, Jean-Guy, no worries, buddy. Yeah, right on. So anyways, this is week 2 of summer holidays. Very cool. Very, very cool. And you'll see that the analysis changes, the focus changes, but most importantly, the expectations of your trades will change. If you haven't adjusted to the summer conditions, which I prepared you for at least a month early, maybe 2 months early, I told you the exact day all of this volume and volatility would drop. So you should know all of this. And as you remember from yesterday, we did a quick sort of measurement on one particular currency pair and found out that last week and this week, volume and at least volatility has dropped by 75%. The thing is, I told you it was going to happen, so now it's happened. So hopefully you've adjusted and taken advantage of sort of my years of experience and tempered your enthusiasm appropriately and really changed your. Again, it's not really a change in trading style per se. Like everything is set up the same, but your expectations are different. So, they're smaller. So what we've called it is, shooting at rabbits, and we'll hunt big game in September. But right now we need to adjust and expect to shoot at rabbits and pick berries through the summer season. With that being said, if you are benefiting from these webinars, please pay it back and thank our sponsor, TradersWay.com. Visit Tradersway, open up a demo account. You can just click a little thing on the home page, and then honestly, probably, I always say less than 30 seconds, probably 12 seconds, depending on your typing speed. You open up a demo account. Cool. When you're in the back office, you'll be impressed. It's very clean and very simple. Everything's very well organized. And from there, now that you have an account and account numbers associated with you, then you can download MT4 or MT5 and practice and trade, play some demo trades. And you'll find the execution speed is faster than most brokers. And I did verify that a few years ago, but I did verify it through a third-party system that told me how fast Traders Way executes their trades versus probably 36, maybe 50 other brokers around the world. And it's one of the fastest, top 10. One of the fastest. You want that as a trader. You place a trade, it goes pa-chow. Why? Perhaps it's because they enter your trade immediately into the interbanking system and they don't muck around with it. So thank you, Traders Way, for that. What else? The spreads are narrow. The swaps are big. And if you ever need help, they'll roll out the red carpet for you. White glove treatment if you need customer service. Cool. Right on. So thank you, Traders Way. Also, I'd like to thank you for the thumbs up, the likes, the subscribes, and all that kind of stuff. That tells YouTube this is quality content. And speaking about quality content, let me move over. Let's get you some quality content. Who wants some quality content? Well, I can't give you quality content until you give me a like. Wait, you're like, well, I can't give you a like until you give me quality content. Okay, so let me try to give you something. And if it's good, please click the like button, okay? So look for the little thumbs up button. I will try to give you in the next few minutes quality content, and if I succeed, would you please click the like button and show me that that's good? Okay? So I'll give it to you first. Okay? All right, I'd like to thank Julie for making everybody a little bit richer yesterday. Jules, as I nickname her, was reading the RBA meeting minutes, Reserve Bank of Australia. And she found deep in the archives on page 3. And by the way, the first page is always just nonsense. So it's really only it's only 3 pages long anyways. But most people, again, will not even read that. Download and read this 4-page statement from the Reserve Bank of Australia. No, I can't do that, Wayne. That's too difficult and it takes too much time and I don't want to read 3 pages. Okay, cool. But Julie did, right? So what did she find? Well, she found that iron ore and coal exports are, strong, nothing unusual. Like they're exporting, there is demand. But the RBA said this. They said they expect iron ore and coal prices to go up because Brazil is still hit by COVID-19, hit hard, locked down, and they are a major competitor for exports of iron ore to China. The Chinese economy is opening up. They need this iron ore because it's the major component to make steel. And they're going to buy it. They need it. And Brazil is a major producer of this, major supplier, and that supplier is shut down. So there's going to be steady demand, low supply. RBA says, you know what? Iron ore prices are likely to go up, and that will benefit Australia. Woohoo! That's the golden nugget right there. At least the iron ore nugget we're all looking for. That is called alpha. That's called smart money. So now, why are we looking at soybeans? So we can extrapolate the next level. And this is my part. So I say, well, if that's true, that's really cool, Julie. What else does Brazil export? And what else will, basically, what will they not be exporting right now because of COVID-19 when they usually export? And so I know China also buys a lot, an amazing amount of soybeans from the United States of America and from Brazil. Brazil, in one part of the, during the Brazilian harvest, and then from the American harvest, from the Brazilian harvest, from the American harvest. And they're constantly buying these soybeans. Soybeans can be used to make things like tofu, but it's also made for cattle feed, okay? So anyway, so if Brazil is not going to be exporting iron ore, they're not going to be exporting soybeans either. So therefore, even though soybeans have been down all year, maybe soybean prices will go up, not because there's an increased demand from China, there's less supply in the world. Supply and demand economics, right? In this case, less supply, prices go up if demand is steady. Interesting. So guess what? In the last 24 hours, China has signed a deal with the United States to buy more stuff from America. What do you think they're going to buy? Probably a boatload, and quite literally, a boatload of soybeans at a higher price than current market prices. And here it is. This is a website, agriculture.com, for farmers. Check it out. You can put in your zip code and get bids from grain elevators close to you. Like, this is cool stuff, right? Because remember, if you're a farmer, you're a commodity trader. And and you have to negotiate prices with grain elevator operators. And if you don't like the future expected price for your wheat or your corn or your soybeans or your barley, whatever you're producing, then you need to hedge it. Very cool, right? So anyways, in this case, soybeans have been down all year until now. Very nice. So we're using that alpha. Where does this alpha come from? Well, Julie can read. That's good. So she's got half a brain. She also has work ethic, because not only does she do the work, then she busts it out. She created spreadsheets and everything to say, well, this is what this part of the Australian economy is doing. And here's a spreadsheet for this other thing and the rate of change and all that kind of stuff. It was down, but now it's improving. And the RBA said this, and this economic stat said that. And she's doing all this work. So she's got a ridiculous, sickening work ethic, at least a half a brain, quite a bit more than that, but at least, right? And all she did was read, and the RBA gave her all this information. So she might be long iron ore, she might be long Aussie dollar, she might be long soybeans or soybean meal futures or options, or there's so many different things. And if you were like Axe Capital and you were Axelrod, you'd be thinking, well, what else is Brazil not going to export this year relative to a normal year? And be front running all of this. Okay? So minerals are produced in Brazil, right? Timber, beef, all this, what else? Okay? And I think they've cornered the market on the world's worst red wine. You're like, why would you drink Brazilian wine when you're like, you're so close to Argentina and Chile? But anyways. So thank you so much. If that, right? I'd like to give Julie a standing ovation, and I'm hoping that you also think that's quality content and you show it by leaving a like. Am I expecting dollar strength? Well, there will always be dollar strength. But the question is, when would I expect it? Over what time period? Well, over the last 2 weeks, we've been expecting dollar strength. And I've been very clear pointing all that out. And then on the long run, I expect dollar weakness, which I've also been very clear. Okay? Okay. So everything is like a time frame. Remember, because everything is relative to something else. So anyways. Okay. So you can do all this yourself. Easy peasy lemon squeezy. You're new? Don't be sorry you're new. You should be thrilled you're new because you just found your new home. So here's my price action pivots. Let's see what they say on this time frame. One standard deviation oversold, so it's 68% oversold. So if you're a bull, you'll be interested in this. Okay. Okay. How did I start trading? I opened a trading account. That's how I did it. I know. What a facetious. All right. Right? So, so here's the interesting thing. So like Ryan and I were talking about swing trading, and you know, I like pivot points because they give me ideas, really. A good idea of where I might want to buy or where I might want to sell or where I might want to take profit or where I might want to take profit on the other side, long or short. And all they are sort of estimations based on what happened in the previous period, whether you're measuring a day, a week, a month, and basically they're standard deviations, right? Slightly off because of the weighted mean, but they're 1 and 2 standard deviations from the weighted mean. That's all they are, based on what happened over that period. So it's just a data set like anything else. And they give you sort of suggestions, but they don't tell you what's going to happen. They don't tell you the future. They don't tell you what other traders are thinking. It's just sort of like a future guide. So if I was a bull, I'd say, well, this downward move is now oversold, so I should probably sit up and take notice. And based on swing trading methodology that I prefer, I could really see buying this around 112 over the next 24 to 48 hours of trading days, right? So either today on Friday or Monday. I might want to be a buyer around this 112 level and take it up to 114. That's what I see here if I was already a bull, right? So, but that's a strategy level. It doesn't actually tell me if it's going to do it or should I do it now. The interesting thing is, so like Ryan and I were talking yesterday, and he's like, well, so he can't take this trade until Friday close. And that's right, but see, that's tactical, not strategic. And that's the whole interesting part of how, like my book means strategic and tactical Forex trading, right? That's why it all puts together. So like my strategy, if I'm already a bull, if you're not already a bull or not already a bear, you're a pig and you'll get slaughtered. Okay? So in this case, I do want to be a bull. I am a bull. I look at this, market conditions are not bullish. This is not great for, favorable for trading at the moment. I only have permission to start creating strategic plans. So I'm basically in an if-then logic statement. Okay? So I'm setting something up mentally here to say, if I'm a bull, then there might be support here in which I could be buying in the near future. Now he needs looking at like a weekly candle, right? So now we're talking tactics. And of course, this is going to be difficult. I guess I have to just kill all the indicators, right? So if you kill all the indicators, kill all the pivots, and kill my, I really got to finish those pivot points. I think they're done. I just haven't had time to download them. My price action pivot points, price action pivots, PAP, Mag Pappy. Where's my pappy at? All right. So now he needs this to close before he can set up a tactical move on Monday. And that's the wonderful thing about trading is it's a combination of strategic and tactical setups. So I might look at this and say, well, that's enough. And on a 5-minute chart, I take this shot north. Okay? And he'll probably need this to close higher or something, right? We need a bullish day or whatever he needs. Okay? Right? Very, very important to know where you are strategically and tactically. So strategy is a generalized form of trying to take advantage of your natural resources, your natural strengths, and try to compensate for any weakness. In this case, what are the right prices to carry out your bullish strategy next week if you get the opportunity? But you don't know if you're going to get the opportunity, right? And of course, as any military person knows, you start with a well thought out plan and then you adapt as you go once bullets start flying and everything goes to hell. And you got to adapt, but you know the strategy, you know the strengths, you know the weaknesses of yourself and your enemy, and you got plan A and plan B and plan C. You know when to fall back and where to fall back to and how to handle, right? So it's your planning that saves you in the fog of war or in the chaos of trading. So again, none of this tells you anything except like, if I was a bull, would I consider this area here potential support? Because I know two things. Well, I know more than two things. If I'm a bull, if bull, so we go if bull, then I buy at support. Okay. So where's support here? Well, that's what technical analysis is, the study of price over time. And you could say, well, there's something down here, right? Or maybe you might measure it this way. Okay, and then there's something way down here, right? Like way down here. And there's something way down here, right? Okay, all right. So there's something around 106. There's something around 108. There's something around 110. There's something around 112. So every 200 pips, there's support. Now, the further down we go, the less of an uptrend we have. So right now, if we're isolating what's going on, we are isolating the potential likelihood of this continuing up. Okay? Now, I have, and of course, let's go back. These are weekly candles. I said this is probably the best time to get out and go on vacation. Okay? And I told you, what, 3 months in advance that single day, right? Do you guys remember it? June 10 is the first day of summer. Well, it's not trending, Peter, so no, you wouldn't draw a fib. Okay? So, right? Everybody knows on June 10th is the first day of summer holidays, and that's probably when you should be getting out of your medium to longer term trades, right? This is the day I went to the beach for a week. Right? Let's talk about that. June 10th seems to be about there. Exact top. Now remember, you can't predict the future, right? But I told you 3 months in advance. I think that's fair. 100 days in advance. That day would be the first day of summer, and that you should not count on trends, volume, or volatility. Is that 100% correct? Because it's either 100% correct or it's not factual. How many people agree that that is 100% factual information, that is the exact day? Not just a couple of days in advance or a week in advance or a couple of weeks or a month, but like, okay? And in fact, I will tell you, I'd have to look up the exact day, but I can tell you the exact day the same thing will happen in 2021. Because it's the same exact days that happened in 2019, 2018, 2017, 2016, 2015, 2014, 2013, 2012, 2011, 2010, 09, 08, 07, 06, 05, and 04 since this has been my career. I don't think I realized that in 03 and 02. Okay? Well, what I'm saying is there is a logical reason, and if there's logic involved, it's not chaos, because once you understand the repeatable pattern inside what may look like noise, if there's logic inside the chaos, then I can teach you, you can learn, and you can repeat. It's like scientific methodology. You can start with a hypothesis, and then you test it, and then if it's valid, it can be repeated in a laboratory by somebody else. You can repeat once I teach you. Huh. Okay. So what's happened since that on a daily basis now? Okay, let's take a look. Because yesterday we talked about looking for a pattern on a 5-minute chart, looking for a pattern on an hourly chart, looking for a pattern on a 4-hour chart. I think we did daily and we also did weekly. So let's go back to daily now. Down, 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 up, up, sell. Down, 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 down. No, Wolf, no. The answer is no. It's just another tool of measuring the same thing. But it's not psychological, but you are right that it's self-fulfilling. But like someone asked me earlier, like, wouldn't you fib on this? Well, not on the chart I showed you, because on that chart, we're not trending. It's not a trend. We're in a range. Okay? So here's what we don't know. Remember I said that every single move now on the euro dollar has been 200 pips? And that we had support at 12. We had support at 10. We have support at 8. We have support at 6. We're retesting 12. Where's the previous high? 14. Right? So right now, what you're trying to discern using your technical and fundamental analysis and your understanding of trader psychology is, will a bull buy it up and take it at least back up to 114, or if it's going to trend up to 116. Right? So you're trying to figure out, and this is your alpha now. You're analyzing this to say you believe this is going to go from 112 to 116. Okay? That's one option. Number one. Let's do number one. Okay? Is a plan. Number two plan. Okay? Is you think this is going to go from 112 to 114 and likely back to 112. Okay? Or three, you believe this is going to go from 112 to 110. Okay? And we have enough people in the room. We have 200 people in the room right now. There's people of our group, all three will be chosen. It's uncanny. There, right? All three will be chosen, and that's how a market behaves. Out of our 200, we would all choose 1, 2, or 3, right? We would all find something we believe in. How can we choose? You've done research fundamentally. You've done research technically. Okay, so you have to know technical analysis. You need to know fundamental analysis. And then you filter all that with your life experience and all that kind of stuff, and you make a decision. Okay? Now, if you don't know anything, it's going to be complicated, right? So if you hear a ticking noise and you take your car to your mechanic and he takes out the stethoscope, which means you're going to have to pay a lot of money because he's trying to impress you, and he puts it down and he's like, oh, it's a tappet. I'm going to have to remove your head. I can't see it, but I can hear it. I'll have to remove your head cover, replace your gasket. I'm going to have to torque it. And that ticking will go away. It's your tappet rods. And you're like, well, how do you know? Well, I've been fixing cars my entire life. I also got an education. I did an apprenticeship, and I've seen this problem 10,000 times. So no, I can't see through your head gas or your head cover, but I'm pretty sure we're going to have to torque. Okay? So how do you know? You have research, you have experience, all that kind of stuff, right? So here's the thing. We are all going to make our choices, and we're all going to be somewhat right or somewhat wrong. Okay? And this is where technical analysis is going to come in, where you are looking for very specific things if you're a 1, 2, or 3. See, number 3 is going to look for a breach lower in the next couple of days. A number 1 and a number 2 are going to look for a continuation in the next couple of days. Do we know which one? Nobody knows which one. But you know exactly what you're looking for. It's always the rocker arm, isn't it, Steve? Although, you know, the last few cars I've owned, I don't know what they do anymore. I remember I'm such an idiot. One time I had this AMG 55 and I had just taken our SUV to get an oil change somewhere, and I didn't go to the dealer, and it was a pretty good deal. And I'm like, I should I should put oil in this AMG, and it's such a good deal, right? So anyway, so I come back to the AMG, and I'm like, yeah, I've owned this car for a year and I've never changed the oil, so change the oil. And they're like, okay, so they pop the hood and they look and 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 look, and they come back and they're like, we can't find the oil cap. Like, what do you mean you can't find an oil cap? This is all you do all day. Like, it must be a dealer thing because we can't even find a place where you put oil into this car. It's a handmade AMG. It's not a Mercedes engine. It was an AMG. So anyway, so I take it to the dealer, and I'm like, hey man, I haven't changed the oil yet, man. You need to change the oil. And he looks at me and he's like, dude, this car's got 17,000 miles on it. I'm like, I know, I'm ashamed. And he's like, no, dude, we will not change the oil on this car until you hit 100,000 miles. And I'm like, 100,000 miles? Like, no one will ever drive this car 100,000 miles. And he's like, that's why you can't put oil into it. It will not need it. And I'm like, nah, I think I paid too much for this car. And so, like, what's inside these engines now, right? Like, I remember as a kid, if you owned a Ford or a Chevy, it was like you'd drive it to the store to buy groceries, and on the way home, you'd have to get an oil change. Otherwise, or it would leak a half a quart of oil all over your driveway, and you'd get. Do you remember the days you're like, well, in Canada, we had full service, right? So you'd pull up to the gas station, and you'd roll down your window, and some kid would come up, and you'd say, fill the oil, check the tank, check the gas. But so anyway, so now they're like, oh, you don't need oil in this car ever. You're like, you're kidding me. Yeah, fix or repair daily. So anyway, so you see what I'm trying to get at, guys? We don't know the future. You must make a decision. And once you make a decision, in this period and price, so we have price on this side and we have time down here, okay? So you're figuring out at this price and at this time, do you have a confirmation of your bias? Your confirmation of your hypotheses. What is your hypothesis? You are deciding in the next day or two if it's going to do this or if it does this. And if you know you're looking for evidence to confirm or deny whether your 1, 2, or 3 theory, then you know exactly what you're looking for, and you will properly be able to set up your trade based on logic and intelligence and not guessing and hoping. Throwing down a trade like a buffoon, like a degenerate gambler. Okay? Do you see the difference between like guessing? So, if you were a bull, what would you like to see here in the next 48 hours? We're on your price. And bears are also on the price. They know this is a place where bulls are probably going to look to enter. So if you are a bear, you might consider taking profit for now. A balance, but let's be more specific. Would that be a general idea if you were a bull? Oh my God. I've been putting ghee in my coffee the last 3 weeks. Okay. Tough, huh? What do you think? Well, Steve says like a crown formation or inverse head and shoulders, all these kinds of things. It's all the same thing. It either produces a higher high, higher low, or it don't. Okay. So what if you? So if you were a bear here, the closer you get to 112, the better off you are. Unless you are okay. If you're a moderate bear, if you're a strong bear, you're a strong number 3. As long as you are below, let me delete this. As long as you're below that upper line, you're a bear. Okay. Now, here's what you prefer. Like this is what I've been teaching you. You trade inside the wicks, right? Well, this was supposed to be like this. So I'd be very cautious already if I was a bear. I'm not convinced it's going to go to 10 yet, even if I'm a bear. Okay. So this might be proving, take profit day. Okay. And I need to be cognizant of that because really, if you kind of look at this bottom and this bottom and this bottom, it's been 3 days since a true low. Well, that's not very bearish. It's technically still bearish as long as you're below that line. Okay? So what a bear needs to feel confident about entering a new trade, right? Entering a second or third trade on this, they're kind of needing this to be, let's say, down on Monday, up on Tuesday, down on Wednesday. Thank you, Paulie. Well, make sure you guys thank tradersway.com. It's not free. Someone is sponsoring this because they want you to be a better trader so that you visit Traders Way, open up a live trading account, put real money in it, and trade successfully and profitably for years and years and years. They will provide the execution services for you, and they will charge you some fees. Better fees than most. You can have a spread. If you'd rather have an ECN account, you can have an ECN account. Okay? So either through a spread or through commissions, whatever you choose, they will earn an income by providing you a legitimate, not helpful, well, what would be the right word? Consistent quality service. So that's how you do it, Paul Moss. Okay? That's how you do it. So it's not free. You have to pay it back. They're investing into you, hoping that you see this video and say, oh my God, I need to be a part of this community. Okay. Anthony says, what's my email? Wayne@fxbootcamp.com. Okay, so going back to 1, 2, or 3, I don't know the future. You don't know the future. You've analyzed things technically and fundamentally, and you've designed an opinion. This opinion we call bias. We also have identified through technical analysis that we are on an area that is likely to be support. So you are trying to now confirm or deny your hypotheses over the next 24 to 48 hours of trading. And you know exactly what you're looking for to confirm or deny your hypotheses. And if you get the confirmation you need, you will pull the trigger and probably or statistically you have a good chance of being right. That, my friend, is how you trade. It's not as exciting as the Bitcoin dude with 10,000 people in his chat watching his videos live, but that's how you trade. Are we going to get a trade on this in the next 20 minutes to get you all hot and bothered and excited? You know what? It probably won't set up in the next 20 minutes. No, it probably won't. Most of trading is waiting. Most of trading, you wait and wait and wait and wait to pull the trigger. And then once you're in the trade, you wait and wait and wait to exit. If you need your trading to be excited, you should try Fortnite instead of Forex. Fortnite might be exciting. Okay? So less than half of you have clicked the like button. Okay? Less than half. So I gave you the soybean stuff and Julie's iron ore outlook. I've given you the secrets to setting up a trade plan in pretty good detail. Probably set you up for a trade for all of next week. Okay, now 107 out of 207 people clicked thumb. So exactly 50% have clicked thumbs up. So the other 50% thinks this sucks. That's how I look at it. Okay, so let's, and by the way, that makes me sad. Okay, so now let's look at this. Why is this happening at this price? Do I use pending orders? Yeah, both. I like pulling the trigger, personally, Kemi, but sometimes I don't have that luxury. Probably not, Alex. Next week, I think, is quadruple witching, though, isn't it? So why is this happening, guys? Well, let me go back to here. Okay, watch this. You ready? You ready? There's two things you can do. You can click on this wick, and you can click on this real body. And now you go back into a 15-minute chart, and you sonja, okay? And then let's throw down a midpoint cycle level of 112.5. Huh. Whale oil B, MR fish. Now, what did we say back on the daily chart? We said if you are a bull, you will need to break above this, retrace back to it, and buy off of it as support, or some version of that. But if you are a bear, you have to sell off here to keep it bearish. You understand? Daniel, it used to be triple witching, but we have more instruments now that expire. So it's actually technically the quadruple witching, but the old term is triple witching. Oh, today's triple witching? Yeah, don't worry about it. I studied it for a couple of years. I paid fairly close attention, and I haven't found any like meaningful, unique movement in the Forex market. Okay. But you see this, guys? So let me try to zoom in. I guess that is maximum zooming in. Let me get rid of this because that's, okay. So that's the day to turn bearish, which I told you 3 months ago. Okay. Down, 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 up, up, sell. Okay. Now we're getting into next week's trade planning. We had option 1, 2, and 3. Okay. And bears need to keep this bearish. Lower low, lower high, lower low, lower high, lower low. Big pullback, they don't like it. But remember, if you are above this resistance area, bulls will buy it. Do you understand that? Like, that's the whole basis of plan number 1 and plan number 2 that we talked about just moments ago. If it makes a higher high, then you're going to buy a higher low. I hope you understand that. If you're a bull, you're looking at these price levels, and if you get a higher high, you will buy a higher low. Bears are the equal and opposite reaction. They have to keep it lower than this price level, otherwise it creates a higher high. And bulls are going to buy a higher low after a higher high. A higher high kills everything for a bear. Kills it. It hits their stops. It takes them out. They don't want that. So where is their line of defense? Where are they going to fight to the death? Okay? If you read The Art of War and say, you are a giant army. Your army is this big. And you've just pretty much defeated an army and you slaughtered them. And now there's half as many left in your enemy. Okay? And they want to retreat. You should let them retreat. Or, at least kill more of them as they run. Cool. That's great. You're not afraid of them. If they're retreating, fire for effect, everything's good. You'll destroy them. Now, if their home is this way, okay? If their home is that way and they have to go through you to get home, they're not retreating away from you. They're essentially retreating toward you. You will get your butt kicked. They will fight to the death. You might kill every single one of them, but they're going to take at least half of you down. They will destroy probably 2/3 of your army. You'll kill 100% of theirs, but they'll kill 2/3 of yours. And now you're a general with only 33% of your army left, which means you're short stacked for the next battle, and you don't want that. So you have to understand sort of the defenses and the strategies of your enemy if you're going to be an honorable warrior. It'd be dishonorable to destroy these enemies but give up 2/3 of yours. Okay? A war of attrition is very frowned upon in the Chinese culture. Okay? So, what I'm saying is you should know the defensive strategy of these bears. And as a bear, that sets you up. Okay? And it sets you up, it's so important. Okay, this is a daily chart. Check it out. We'll drop into a 15-minute chart. Oops, I gotta turn the tool off. And that's it. Look at that defense line. Okay? Now we know if bulls are going to get involved here, they're going to do it here. Okay? So this is really getting interesting. Okay? But this is the key spot here for the entire day. Today is a Friday. That is the defensive line in the sand for bears. This is why I said, if bulls breach this defense line, the bears will retreat. Bears, see, I love Fridays. I love Thursdays. Okay? Strategically, I love throwing it down Monday's trade on Thursday. Okay? But anyways, On Fridays, you face a little more risk over weekends and stuff, but no. Okay, so you have to understand, guys, like looking at this, this is the line of defense for bears. If bulls take it higher, the bears will stop out and they will walk out. The war is over. They will retreat and go home. Okay. Well, William says, how do you line up weekly time frames and monthly time frames to match the local? Yeah, patience. That's all it is. You have to be away. You have to be willing to walk away and say, you know what, I'm not going to trade for the next week or two. If you're setting up things strategically that way, so you're like, I need the big time frames to align first before I do anything on the lower time frames. Yeah, then you have to have that kind of patience. On the long run, what you'll produce is you'll have a lot less opportunities, but you will have a lot lower volatility in your portfolio. So if you're profitable with low volatility in your portfolio, you'll have no problem attracting investors. That's what people want. Okay, they don't want the volatility, right? So they don't want you to make 8% one month and lose 3% the next, and then make 6, and then make 10, and then lose, lose 4. You're just all over the place. So if you want the consistency in your results, you'll probably only trade in aligned market conditions, and that makes you more of a swing trader and a position trader. So you'll stay away from spot trading and scalping, and that's totally cool. Okay. But you'll have to have the patience. But you'll find it's probably the right thing to do. Okay. So let's go back to this, guys. We can look at this. And this is why I said if you're a bull and you find us up here at the end of today, then Monday you're probably going to do something like that. That's exactly why. And to explain it, why? If bulls buy here and cut through this line of defense, bears will stop out and not re-enter the market, and therefore bulls can buy higher lows at a roll reversal and take it north probably all next week. Okay? There is none, Daniel. Pretty much. Okay. And if you are a bear, you don't believe that's going to be that will happen. And we know this is the top of the daily candle. So the daily candle looks like this. So you're defending that line. Okay. And you believe it's going to make a lower low. So this is your only sell for really today. And you hope that New York looks like this. Okay. And bulls hope New York looks like this. By New York, I mean the next 4 hours. Okay. Yeah, well, why make it more complicated? So if you're looking at GDP, CPI, PPI, PCE, industrial factory utilization and capacity statistics, if you're looking at the velocity of money, the M3 supply of money, all of this stuff is interesting for sure, eh? But the only thing that matters is what the Fed is going to do next. The Fed is the one that analyzes all that data. The only thing that really matters to us as foreign exchange traders is what will the Fed do next. Not even what did they just do. What will they do next? And by next, I don't mean the next meeting. I mean the meeting after the next meeting. Because we already are trading what we think the Fed's going to do next. Okay? So we're already trading what you think is going to happen sort of late September. Okay? That's what we're on now as currency traders. Everything else has been priced in. So you're trying to discern September, October. Okay? Frank says the standard deviation. Okay? So there's two here, right? There's linear regression and standard deviation. Okay? So you can start with the linear regression first. Okay? And then you can and see if you like that one. Or you can do standard deviation and you measure the same period and you get something different. Okay? One standard deviation or two standard deviations. But that's how you do it from the channels area. Channels, okay? Now, I'm testing something out that I had programmed for me, and it's to do it this way. Okay. So this is an outlier. Okay? Remember, indicators are not smart. It's just telling you, it's just measuring what you're asking it to measure. Okay? This outlier for these tools, right? This is price action pivot points now. It's unexpected in these tools and thus creating an outlier. But we know as traders, this is the most important sell zone for bears today. Okay? That sort of 15 pip zone. That's it. So we can think ahead. The indicators cannot. Your moving average is stupid. Your CCI, your stochastics, your MACD, stupid. Okay? Because they're not thinking. They're literally not thinking. They don't think. They just draw lines based on the programming and the algorithm. So you have to be able to read this and read the charts. Okay? So remember yesterday I said you need to become an expert in three things. One, technical analysis. Okay? And if you were working at a firm, this makes you an analyst. Okay? You are a chart monkey working for somebody. Okay? That's it. All day, every day, you're busting out trade ideas for your portfolio manager, but they don't even talk to you because you're just a grunt. Okay? Cool. Two, you must know fundies. You will not be a professional ever in your life if you never master fundamental analysis. Okay, I'll put it that way. Okay, this makes you an associate. Why? Because you're learning how to make decisions. Trying to get that in there. Okay. So this means you can start looking at fundamental data and actually start thinking. Well, I think the Aussie dollar will blah, 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 and wah, wah, wah. Okay? And maybe your PM listens to you or not, but you have conversations with your PM because they're basically grooming you to be a portfolio manager. And they're like, okay, well, give me a daily update on the news that's happened in Australia over the last 24 hours. And you're like, sir, yes, sir. Ma'am, yes, ma'am. Well, in Australia, there is this headline news, and there's an election coming up, and this RBA guy is going to retire, and there's a presentation done. Here's the PowerPoint deck. By the way, you know, here's the news releases that have come out, and here's the interesting rates of change. you know, and not directly associated with Australia. There was news out of Japan, which would affect the yen. There was news out of China that would affect renminbi and also balance of trade, and you should be aware of these things. Tomorrow, you'll have this, this, and this to look out for. And then I say, you know what, thank you very much. And the PM loves that, okay? Cool. And 3, you need to know the market psychology, trader psychology. I got this wrong. Sorry. Can't think and write. There's no spell check on, right? Okay? And this is where you're a decision maker, manager. Manager. Okay? And this is where you can take this in, and say, well, what will people do? You make decisions. You're a decision maker now. So the associate keeps you up to date with fundamentals. The analyst gives you trading ideas, and you can say, yeah, thank you, got all that information. And now they make decisions on where bulls would buy, where bears would sell. Do they like these trades? Do they not like these trades? Doesn't matter, but they're making decisions. Okay, you understand that? And you need to know these 3 levels. Okay? You need to understand where you are. Right? How many pairs do I trade? The vast majority of my trades have a yen or a dollar on them. Sometimes they got a Swissy on them if I've loaded the boat on the yens and the dollars. And sometimes they're exotics, and sometimes they're not. Sometimes they're crosses, but usually not. Crosses muddy things up. Crosses are so short term and usually not fundamentally based that I don't really trade crosses. I used to. When I first started, I started trading crosses because it made sense to me that I'm going to trade the strong versus the weak. But to figure that out, I had to look at what happened yesterday or in the last 24 hours. And the built-in assumption there is what has happened over the last 24 hours will continue to happen over the next 24 hours. And I found out that is actually, over the long run, pretty inconsistent. It's a funding currency. The Japanese yen and the US dollar are the most important currencies in the world. Okay? They are both funding currencies. And, 25 years ago, the Japanese yen was almost a reserve currency, right? You had a stable legal system. You had a stable government system. It was, it wasn't open border, right? But Japan also has a very mature bond market. Okay, so trustworthy legal system, mature bond market. It was the second largest economy in the world, right? So the way the world works is they function like the grease in the machine, in the global macroeconomic machine. The grease is made from US dollars and Japanese yen. They're funding currencies. They're the grease for a well-oiled economic engine. Okay. Yeah, profit taking. New trader says, can anyone tell me why the US dollar is strong? Yeah, profit taking. Okay. And so that's why I've been a bear on US dollars since the day the Fed said they were not going to go negative on interest rates. So that exact day is the day that I was bearish on the US dollar. And I also explained I'm probably going to be bearish for the next 3 to 5 years, unless things change, of course. Meaning, like, if we get hit with another COVID or something, then I will immediately change. But that's what I'm looking for. So since that day, okay, which was what, 3 months ago, 2 months ago. I've been bearish on the US dollar, and I will be bearish for years and years and years unless something radically changes. And I will let you know the day that that happens. Okay? Then, in that, I'm either selling the US dollar or I'm not selling the US dollar. And I said on the 10th of June, the selling of US dollars is likely to stop. And all of a sudden, you see me sitting on a white sandy beach playing in the azure waters. Right? And you're like, well, what the hell is he doing? Why isn't he in the office? And I said, well, that's when I said you should stop trading. That's the summer. We're going to lose volume and volatility. Doesn't mean I'm a bull on the dollar, but I expect the dollar to be, at least on the short run, more strong, which is funny, right? More strong than otherwise. Not because people are buying it, because people are not selling it like they used to. Oh, you like that, Raymond? Yeah, check this out. Oh. This is a beautiful board. Look at this. Beautiful, man. Beautiful, beautiful. Look at that. The original rat bones. Remember Steve Caballero? Oh my God. I got so excited when I'm like, look at Vision Streetwear, no way. I got the original wheels, the B-52s, sitting on independent trucks. Can't get them in there. The original, anyways. Awesome, huh? Look at this, man. Just gorgeous board. And if you look, I think the date's in there somewhere, and it's hard to see. 1983. Cool, huh? That's one of the first and original Tony Hawk vert boards. Oh my God, it's awesome. Javier used to have Lance Mountain. Yeah, another good vert skater. And then you guys might know this one too. This one wasn't really a love, but it is one of the most important skateboards. This came out a year later, in 84. So I'd say of the sort of Powell Peralta world. So this one's pretty nice. I mean, it's pretty good condition. Like, look at the tail. No tail guard and just a little bit of rash, but it's really not bad. I mean, look at that. It's almost mint condition. It's got the original independent trucks and B-52s as well. So it's so old, like that Tony Hawk has the original Bonite, but it's a prototype with Bonite. Whoops. It's a prototype Bonite. But the interesting thing is, ramp wheels had not been invented yet, so it's got street wheels on a Tony Hawk vert board. But the vert board idea was brand new. That's the first real skateboard made for vertical half pipes. And it still has street wheels on it because they hadn't made the harder wheels for riding on plywood. So it still has the street wheels. It's amazing. It's like, if you know your skateboards, those are two of the most important skateboards of the genre, of the era. right? So anyways, yeah, neat stuff. So I wasn't sure if I should put them on the walls or something. I'm sorry. No. Can I give fundamental commentary on Hong Kong dollar? No, I don't feel I'm qualified for that. Okay. Cool. So we're still watching this, and you understand if you don't know if you're 1, 2, or 3, then you don't know how to trade this. Okay? And you know bears are trying their best, and we know bulls should be defending this line. So now, what do we see? Let me change to this, and let me make it thin. What do we see now on a 5-minute chart? Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. This was very important because if this went higher than this, bears are likely to be slaughtered. But they defended. They defended off of a pivot point, actually, which means they are watching. And now you have the down, 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 down. Okay? And if we get the lower low, you got to watch for the lower high and then lower low. Okay? And of course, if you are now, so let me change this to that and do this to that. So if we breach through this level, that will be critically important. Okay? And the next big test after that, of course, obviously, is right here. Okay? And that determines what you'll be doing the next 4 hours, really. Because you'll have to breach this, pull this, get down here. There'll be some sort of battle down here. You know, because on the longer run, this is what you were trying to figure out on Monday. So if we end low here, then Monday you're trying to figure out, are we going from 112 back to 114 and then up to 116? Or are we going to go from 112 to 114? Or is this going to go from 112 to 110? And that's your plan A, plan B, plan C, or plan 1, plan 2, plan 3 that we already highlighted. Okay? So now we're on 5-minute candles trading price action. And we knew this is really the only line of defense bears have left. And we know they live and exist and they're healthy right now because we've seen them. Okay? That's exactly where a bear was supposed to sell. Conservatives don't make great skaters. Yeah, that's probably true. I wouldn't say I'm a conservative. I'm an elitist. Okay? Mm-hmm. Bum, bum, ba-dum, bum, bum. Don't you just love price action? But this is what trading is you sit here and you might be on 3 or 4 trades and you're just like, now you got to wait a half an hour for the next one, a half an hour for the next one, and a half an hour for the next one. And then you get stopped out on all of them. But here's the thing, and this is where sort of like YouTube kind of, not YouTube itself, but watching traders on YouTube can be a disservice where you think this is where the money is. I'm like, oh man, this is so exciting. I find this part is just silly and simple. And really after the fact. The money, as I tried to show you at the top here, okay? Because remember, we started this whole process at the top. What I'm really trying to tell you is this is where the money is made. This is where your wealth is made. That you did your analysis, you have a bias, you have an opinion, you know what you're looking for, you know what these levels mean, you know if the level breaks what it means, and if it's held, you know what that means, and you make trading decisions based on that. It's a mix of technicals, fundamentals, and trader psychology, and you're like, yeah, if this drops here, I'm going bear, and then you're going to sell that one, you're going to sell that one, you're going to sell that one, you're going to take it down to 120, and there's going to be a big battle there. So maybe you take your profit there, or maybe you let it run because you think all next week will be bearish too because of your fundamental analysis, blah, 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 wah, 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 wah. But, right? But the disservice that I was talking about is you think, oh, if I only knew how to do this part, that's where I'll make my money. Well, no, not really, because you could have just sold this and walked away and you're like, you're done. Move your stop to break even. You're like, yeah, well, if this breaks through 112, I'm really going to get paid. Because we know if it goes from 112, it's going to go to 110. How do I know that? Well, I don't know it, but we just did the study, and that's what I showed you. And it's like, that's what's been happening. So if I can breach this 112, it's going to 110. Enough said. So I will place this trade. I'm done for the day. I'm probably done for the week. I'm either going to make 250 pips on this or I'm going to make 0. What the hell do I care? I'm done. Or you can drop all the way down to a 5-minute chart or a 1-minute chart and do something similar, right? Down, 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 up, up, sell, down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, blah, 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 blah. But if you can't do this, you can't trade jack. If you can't plan this out, if you don't get this, you can't trade jack. So you might be able to trade this, but you'll never be able to predict that it's likely to happen before it happens. And that's the point. That's your money maker to say, well, that's where this type of price action on a 5-minute chart was likely to show up. Because you understand why. It's not about how to trade, it's why trade set up. And if you understand why, then you can say 100 days in advance, June 10th, we're going to lose volume and volatility. You should probably go on holidays. Literally, I said, it's the first day of summer vacation. And then on June 10th, you see me laying on a white sand beach with azure waters and beautiful waves, and son of a gun, it literally is the first day of holidays. Not figuratively. Hey, y'all, I'm on the beach. What'd you think of that Fed meeting? Yep. Okay? And that's all why. If you, right? So right now you might not understand global macroeconomics. But you'll need to one day. Because knowing this doesn't even tell you if it's going to do this the next year or this the next year. Boy, that reminds me of the rat bones now, all of a sudden. I got Paulo Peralta on my mind, right? So I have an opinion. You notice how I'm opinionated? I'm a hard person to talk to because I'm opinionated. But I'm probably a wonderful person to have trade your money for you, right? Because I am opinionated. So I know exactly what I'm going to do. And if market conditions don't fit exactly what I want, then I don't trade. So I've already told you, I'm probably going to be selling the US dollar for the next 3 to 5 years. So let's just dumb it down. I'll probably be selling dollar for the next 1,000 days. Am I clear? Do you understand me? Do you understand my point of view? If you invested with me and I said, I'm going to sell the US dollar over the next 1,000 days unless something changes, you're like, yeah, I totally understand what he's going to do. I'm going to look for opportunity after opportunity after opportunity after opportunity to sell the US dollar. I might buy euro dollar, I might buy pound dollar, I might sell USD CAD, I might buy Aussie US dollar, blah, 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 wah, wah, wah. And how the hell can I make a decision like that if I don't know what's happening tomorrow? Well, I don't know what's happening tomorrow, but I have a theory. I have a hypothesis. And I'm basing my hypotheses of the filtration of macroeconomic data and I filter all this economic data into a bias. And that tells me the direction a reserve currency is likely to go based on my understanding of macroeconomics. Maybe you're not there yet. I spent, I don't know, 15 years studying macroeconomics, and then I went to Harvard and got a degree in macroeconomics, learned macroeconomics from multiple professors that are employed by the Federal Reserve Bank of the United States of America. I didn't really learn a whole bunch more about macroeconomics than what I taught myself over 15 years. But at some point, I have the belief you will need to know macroeconomics because it helps you understand the why. And if you're ever going to raise money from an investor one day, you kind of have to appear like you know what you're talking about and that you can reasonably predict the future. See, here's what I'm doing. When I say I'm going to be a bear for 1,000 days on USD, what am I doing? I'm predicting the future. Do you understand? Out of those 1,000 days, there could be 400 days that the dollar is a bull. Cool, right on. I won't be trading those days. Now, you might have a different opinion. You are a bull for the next 1,000 days. You've analyzed macroeconomics. You've made your decision, okay? And you're going to have 400 days where you're going to be profitable. And 600 days you do basically nothing. So 1,000 days later, do you know what we see? You know what the outcome is? I made money. And you made money. And everybody else transferred their wealth because pigs get slaughtered. So we divvy up all the nonsense, all the piss poor trades with no plans, MACD told me to sell kind of crap. And those people that did not do the work, are incapable or unwilling to put in the time, they transfer their wealth. In this case, if I got the trend right, I make a little more money than you, but probably not a lot more money. And they simply transfer their wealth to us. You're a bull, I'm a bear, everyone else transferred their wealth to us. And you're quite happy, I'm quite content, because we actually work together. Bulls and bears work together. This is the amazing thing you have to grasp over time. It's not a war. It's symbiotic. I take turn crushing people that have no idea what the hell they're doing, and then you get your shot and you crush people that have no idea what they're doing. Now, It might be a retail Forex trader that wants to pop 500 bucks into an account and blow through it in a couple of days. Whatever. But it could be the greed and the sloth of hedge fund managers, or the sort of laziness and incapability of a chief financial officer of a Fortune 500 company that just simply moves money from the UK to their European branch, and they don't really care about what rate or what price or what cost to do it. They just simply say, well, I need to move stuff from our London office to our German office, and they just do it at a piss poor time, and all that laziness or misunderstanding or inexperience or degenerate gambling, all of that goes to the smart money. Those that are willing and able to do the work, to plan their trades, to understand their bias. And guess what? Bulls buy at support, bears sell at resistance, and everybody else loses. If you're a bear and I'm a bull, we're both going to make money. You have to understand that. But if you don't know why, but you do know how, you know how to trade, but you don't know why these set up, you'll probably be at break even. Because technically, you see this setup now, and maybe you get it here. But you missed this one, you missed this one, you missed this one, and you don't know why. So you don't see the giant bounce that's about to happen, and you stay short and it goes like this, and you get knocked out with 18 pips or 12 pips or break even, because you didn't understand that this was going to happen, and you don't understand that that's going to happen, and you're always late. You know how to trade technically, but you're always late to the party. You're late getting in and you're late getting out, and it's not incredibly profitable. Pretty harsh language today, huh? But imagine this. If you don't see this coming, as I showed you from the top of my webinar, and why it's setting up, you'll never consistently be prepared to take these trades. And that's the point I'm trying to teach you. I want you to know why it sets up, where it's going to set up, and then, of course, after that, look how complicated this is. Down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 down. Okay? And by the way, giant candles are the frightening ones. Because anyone sold here and they see this giant candle, you're almost daring them to take profit. I dare you. I dare you. Right? Remember, the faster you make money, the more you're going to jump out. The faster you make money, the faster you're going to bail on it. Okay? So once again, about 50% of you have given me a like. May I please ask you to click the like button? It doesn't do anything for my ego, but it does tell YouTube this is quality content. And our community of 14,100 traders would appreciate that if you kind of showed some loyalty and respect and maybe joined our family. Subscribe too if you could. Okay? Funny, don't... you have to have confirmation. Don't buy it because you're at a price. That's a guess. So for example, even on this 5-minute chart, so we said this is the obvious level, but even notice that it took 5, 10, 15, 20, 25 minutes. So you have about a half an hour to set up your trade, even on a lousy, no good, stinking 5-minute chart. Okay? And King Boss is like, sell now? Absolutely not. What the hell are you talking about? Oh my God. That is the most ridiculous thing, dude. King Boss? Come on. If you don't have a green candle, you don't have permission to sell, buddy. You don't sell red candles. Okay? You could have sold here. 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 And it's gone now, dude. It's gone. Okay? Bears are thinking about taking profit. The only thing we're hitting now is bullish stops. Yeah. No, but I slapped you a bit, King, but I'm making a point for everyone. So I don't mean to hit you personally, but I have to hit that hard because that is ridiculous. If you walk in, you're like, oh, you're looking around like, do I sell now? Oh my God, you should stop trading. Yeah. Right? Oh, like stop trading, like literally take a month off. Okay? Yeah. Take a month off, stop trading. Okay? And again, I'm doing that. It's good advice. Okay? So I'm not picking on you personally. Okay. So we're in that 80-20 level, guys. Okay. Okay, let's put this in. Okay, put this in. Who remembers 1, 2, and 3? We had 1, 2, and 3 plans. Okay. Here it comes, guys. So again, I apologize, King Boss. I was rude to you, but I was trying to make a point for everyone, not just humiliate you. So thank you for being here. Here's what I want you to understand, and I said it, and I'll say it again because it's so important. If you didn't have this planned yesterday, you should not be on this trade. Okay? If you don't understand why 112, right, 1.1250 held, if you don't understand that, you need to stop trading. You don't know how to trade. That's all. Like, back off. Let's focus on training a little bit. Stop trading your account and let's get you figured out. Because it's not these 5-minute scalps that matter. Okay? The 5-minute scalps, like I was saying while it was happening, are irrelevant. If you don't understand why this is happening now, you're not going to catch the next one or the next one or the next one. Now, yes, maybe you can trade price action. You can trade this properly. But if you can't figure out where it's going to happen before it happens, then even that knowledge is quite irrelevant. Okay? Yeah. Yeah. Yeah, and I should thank King Boss for actually being brave to ask. Right? Right? There's no such thing as a stupid question, only stupid trades. Right? You're like, hey, it wasn't a stupid question, but if you traded that, that would be stupid. That would be a stupid trade. Yeah. How would you learn it? Maurice, you would come here every single day. I've been doing live webinars on YouTube for 12 years since YouTube's been a company. I was a beta tester for YouTube. So as long as YouTube's been around, I've been putting Forex videos up. There was a time, if you went to YouTube and typed in Forex, my videos were the first something like 12 pages. By the time you heard of YouTube, I already had like 200 videos on YouTube. So you type in Forex and it'd be Wayne, or actually FX Bootcamp, FX Bootcamp, FX Bootcamp, FX Bootcamp. There'd be like 20, right? There'd be like 20 videos on a page, and then you go to page 2, another 20 videos from me. Page 3, another 20 videos. Page 4, another 20 videos. So that, so I've been here a while, and I'm willing to help. Okay? Not many people on YouTube have more than 5,000 videos on Forex, which means I've been trading longer than most. Okay. Yeah, Mr. Connor, it's really strange. So that's why, Mr. Connor, he says, I type in Forex and all he gets is idiots. This is why I need you to show YouTube that this is quality content, and the child with the Lamborghini that so easily makes money on his MT4 on his cell phone. So you're like, oh, I know how to trade. Look, boom, boom, boom. It's so easy on my cell phone. I don't even need real indicators. I don't really need anything. I can just trade this and look at my yellow Lamborghini. Like, that's not quality content. That's not quality content. Okay. Okay. So anyways, my point is this is the only thing that matters in the moment. And what happens next is just sort of the time frame in which you are looking at it. Okay. Also, to add to this a little bit for those that are longer term traders, okay, this whole area here is extremely key. Okay. Extremely key. Extremely key. I mean, this is very, very informative. Okay? And from that, you would expect down here. So if you are a seller here, okay, then you were probably a seller here. You were probably a seller here. Okay, you're probably a seller here. But what's your expectations? Again, if you can't plan the future, you're not going to know when to get in and get out right? Because you have to be able to plan that forward. So if you get down to this 110 level, or the closer you get to 110, the more likely this move will stop. This whole move here, down, 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 up, sell, down, 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 up, sell, down, 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 out. Okay? And if you try the up, sell again, don't be shocked if it does this, and you just gave 50% of your profits back because you just don't know why it stopped and reversed. That's the problem. Okay? That's the problem. That's why you need to know why, right? Why people would sell. Why would people stop selling? Why would they exit? It doesn't start going up. You always have to understand this too. It doesn't start going up because bulls are buying. It starts going up because bears are exiting. Okay? Okay? Moment of silence for the Lambos. Yep. I think everything's been said. Just kind of thinking about it like, yeah, every message I could possibly give you has been said. Right? So there's lots of resources available over all these decades now. People have asked me to write a book, so I wrote a book. They asked for video training courses, so I made video training courses. They asked for my chart templates. They asked for a good broker. All those links are in the description below the video. So if you want these charts templates, the link is in the description below. If you want to take the training course or join my live trading group, the links are below. If you want a good broker, the link is below. I mean, whatever you need, I'm trying to offer you and help you. Okay? Okay. So, yeah, am I a billionaire? No, I'm not a billionaire. Sorry, guys. I've approached $1 billion of volume monthly, but right? But no, I'm not a billionaire. I'm just a regular Joe. Just another Harvard asshole. KG, I don't pip and tell. I also don't work with Americans. Yeah, no, but that's even like a dangerous question for me to even answer. So it's not like I'm being facetious about it. It's a dangerous question for me to answer. So no comment. Right? You guys will have to figure it out. So anyways, well, first of all, I'm not asking for money, so I wouldn't try to impress you. And by the way, anyone trying to impress you probably isn't worth investing into. So whatever. Whatever, right? So cool. So I'm glad you're here. I'm glad you're alive. I'm glad you're healthy. I'm glad you're sane. So cool. Glad to have you here, guys. Have a wonderful weekend. Right? Yeah, Maurice, that's cool, right? Well, yeah, it's a weird question, but anyways. So have a wonderful weekend and everything. Do I do this every day? Every day for about 15 years. Yes. So the probability of me doing a webinar on Monday is pretty good. I'd say even within 3 standard deviations of the mean. Yes. And then Anthony says, euro dollar down next week. Well, I already planned all that out for you. I wrote all the lines, I wrote all the strategies, and you should know what to do next. If not, you really need to take a training course, because I literally wrote all the 3 possible plans and how to recognize which one is being fulfilled based on our technical analysis of the charts. So if I write it out and show you plan A, plan B, and plan C, and you don't know what's happening next week, you need to take a training course. Because I gave it to you on a silver platter. So if they're still kind of like not so sure of what's going on, invest into education and stop training. Okay. Yes, that is statistics. One standard deviation is 68%. 2 standard deviations is 95. 3 standard deviations, I think, is either 98 or 99. But the funny thing is, with a possibility of error, a margin of error of 1% is like saying there's, that the moon is not going to crash into Earth on Monday. Okay, great, but that's not really helpful information, right? So yes, there's a 99% chance that I will do a webinar on Monday, and I would welcome you to join me. Okay. How many days have I missed because I've been sick in the last 15 years? How many sick days have I taken in the last 15 years from doing my monthly webinars? Maybe what? Less than 15? Like, right? Now, sometimes I'm traveling across the world, but even then I bring you and do the laptops. I just went on vacation. I never missed a webinar, right? So, yeah, there's a pretty good chance I'm going to be here on Monday. Okay. When I visited India and I got back and I was, wounded, like a war wound, with Delhi belly, I laid on my floor of my office, looking up at the screens. I had a wireless mouse on the floor, and I did my webinar with you guys, and I did my trading, laying on the floor with my Delhi belly. Very cool. Cool. Yeah. So, yeah. Right? Like, for example, if you think Forex is too difficult, it's hard. You must learn a lot, and you must try a lot, and you must spend time in front of your screens a lot. But if you think that's difficult compared to running a welding business or running a restaurant or being a farmer, then oh my God, you're not going to make it. Because farmers work hard. Restaurant owners work hard. They work nights, they work weekends, they stay up late, they pick up food at 4 o'clock in the morning, and they're doing food prep at 7, all for lunch. So if this is too difficult, I don't think you're ready for much of the real world. This is the easiest job you're ever going to have, and you're going to probably make the most money you've ever made. Right? And then you could, if you wanted to, become rich and famous, and you can do YouTube videos of you and your private jet and your Lamborghini, and people love you and admire you. You could work much, much, much harder as a farmer or owning your own restaurant and never have a day off, never have any glory, and never make any serious big money. So if you screw up your chance to be a professional Forex trader and not only achieve all your greatest dreams, but have to rewire your greatest dreams, if you're not willing to fight for that, I don't think you're going to have it. Okay? And there it is, guys. Right off the 80-20 rule, right off our line, right off our discussion. So we picked the top and the bottom. That's how you do it. You're welcome. I will see you Monday. Easy peasy lemon squeezy. Have a fantastic weekend. Thank you for being in my life. I appreciate it.